I'm just looking at you know, the wall here behind us. We're seeing sort of a mixed picture. Quite a few positive elements, but we ended the day flat, and that's because of the resource space in South Africa.
Yeah, I think the market took its cue this morning from what happened in the US yesterday. We obviously saw nice earnings coming out of Apple, IBM, Coca-Cola, and the market opened quite strongly this morning. However, at 3 o'clock when you saw the US market open, it was down slightly, and that pushed our markets down and ending flat, as you say. Gold shares in particular were the hardest hit in the market today.
Okay, we're going to put you on pause for just a second, and we're going to talk about commodities now. And joining us from London is Daniel Smith, metals analyst at Standard Chartered. Daniel, thank you so much for joining us today. As I mentioned, we've seen quite a bit of rhetoric and talk about what's happening on the metals market. Let's delve into the industrial side of things and let's look at the copper market. It seems that we're starting to see a very different play between what we're seeing on the precious metal side and on the copper and industrial metals elements.
Yeah, I mean, copper's had a pretty good run in the last week or so, but as you say, coming back a little bit today. I mean, we think there's been a lot of bullish drivers for copper recently. So the most recent data out of China, I think, was very supportive. So the macro figures were quite strong, inflation was high. But more important in terms of the actual copper numbers, we saw that production growth was actually quite strong in China in June. But they continue to suck in significant amounts of imports and to draw down local inventories. So what this tells us is that actually the consumption of copper within China is actually doing pretty well. And this is really on the back of continued strength in the construction markets. And if you look at some of the indicators for aircon units, for example, they're also pretty robust. So we think that side of things is helping to keep copper demand very strong. And also on the supply side as well, we saw some numbers from Rio recently showing that copper supply was down pretty sharply in Q2. Escondido as grades are falling. So again, this kind of adds to the bullish story for copper.
Okay, well, let's take a look at the likes of the platinum market, because as we know, it's an industrial metal. It's got elements of the precious element as well, because a lot of investment has come to the fore. When you look at platinum, do you think that it's acting more as a precious metal right now, or do you think that it's starting to act more as an industrial metal?
Yeah, I mean, I tend to think that, I mean, platinum has kind of bounced back a little bit from the recent lows. I mean, we still think platinum is a very good medium-term story, so supply side is likely to remain very constrained. Of course, at the moment, there's a lot of kind of strike action in South Africa, which could potentially upset the supply side of the equation. On the demand side, I think things are still pretty robust in terms of the wider transport market. So things like, you know, the truck market is very strong and in a significant rebound situation at the moment. Also passenger cars as well, we think they'll continue to ramp up in the months ahead. So both supply and demand look quite good for platinum at this point, I think.
Okay, so the silver market and gold, of course, have been topic of conversation. We've seen gold coming under significant pressure overnight, various reasons. Some say that Alan Gray's negative report or bearish report about the possibility of the debt scenarios playing out positively in the likes of the US and Europe could be a negative aspect for the likes of gold. And then we also had silver rallying significantly and also shedding some ground. Now, do you think that these movements, we can read something into it, or do you think it's just a knee-jerk reaction and we could see some more gains for both of silver and gold?
In terms of gold, I think we were kind of overdue a bit of a pullback in gold. So we did have kind of 11 days on the trot of rising gold prices, which was actually the strongest consecutive run of higher prices since 1980. So I think we were screaming out for some kind of consolidation once we got much above 1600. So it didn't surprise me that we saw prices pull back today. I think most likely in the short term we're likely to see a slightly deeper pullback. So we think strong support for gold will kick in around about 1540. So that's where you get Fibonacci support as well as kind of congestion support from previous trading. So we think that will be a kind of key level to watch. But we remain very bullish on gold from any kind of medium-term perspective. So the inflation remains very high in Asia, and in these kind of countries like India and China, they're a bit softer now than they were, but they're still likely to be very strongly supportive for the gold price over the remainder of 2011.
Fantastic, Daniel. We'll have to leave it there, but thank you so much for joining us. Much appreciated for your time. Daniel Smith, Metals Analyst at Standard Chartered, and I continue our conversation with Andrew Dittberner. Aveng out with a trading update today saying that headline earnings per share, full year headline earnings per share could be down by as much as 40%. So construction industry still in the doldrums. I know that Cannon Asset Managers is very bullish on the construction industry going forward. We know, perhaps in the long run. Have you bought into the Aveng story in particular?
Yes, we have. I think there was nothing that was unexpected in that trading update. We knew the earnings were going to be down at least 30%. So between 30 and 40% was what we expected. The McConnell Dow, they had a couple of tough projects that they had to deal with. That seems to be coming through now. Aveng, we still like their long run outlook. I think the order book was in at about 37 billion. That's a 2-year order book, which was up about 20% from December this year. So there's still, we've seen that uptick. Although the full year earnings aren't that great, the uptick is busy coming. And from a valuation point of view, they still look
so you hold Aveng then?
We do hold Aveng, yes.
It's down 18% today at 36 rand.
We've held Aveng for some time. We've been, as you know, we've been overweight the construction sector for probably a year. We're a bit early, but yeah, we're sticking to our guns.
Okay, with regards to resources, BHP Billiton also out with some numbers today, and it seems that I was chatting to Ian Cruikshanks a little earlier, and he was saying that very positive about BHP Billiton. They're doing the right things. We know that the most recent deal, Petrohawk, $12.1 billion deal. I know that resources aren't exactly what Cannon Asset Managers have been looking into. What is your resource play at this point, and what do you make of BHP's numbers?
Resources, we slightly underweight. We're not very negative on resources. We aren't exactly bullish on resources. We're pretty much on weight across the board. Billiton, that's a world-class company. The quality has been there for many years now. They do the right things. I think Marius Kloppers was probably saved by regulators with his Potash deal and Rio Tinto deal a year or so ago now. But within the resource sector, our big play at the moment is Anglos. We do prefer Anglos. Very similar sort of company to Billiton. Not as good quality, but then it's trading at a big discount to what Billiton is trading at the moment. So Anglos is our bet in that space.
So Metrox also out with production numbers, and we saw copper output only increasing by around 1%. Cobalt output down a little. We know that there's an imminent deal there. What would your play be on Metrox right now?
Metrox, I think that's a copper play. I think that's your what's your view on copper? We hold Metrox some time ago when they went for a rights issue at 2 Rand when the share was trading at about 8 Rand. So we got carried out there. We haven't held Metrox since. We didn't follow the rights. It doesn't look too badly priced at the moment. I think if you look through the cycle earnings, it trades on a cyclically adjusted P ratio of around about 8 or 9 times. So it doesn't look, it's not expensive. But again, it depends on your view on the copper price.
Pick n Pay up 1% today. The likes of Shoprite flat, but slightly to the negative. Of course, we had the retail sales numbers out a short while ago. What do you make of the retail space? And also a lot of the rhetoric out of retail analysts that they don't really have pricing power at this point because we're not seeing the demand filtering through. Yeah,
I think that the whole retail space is probably a little overdone. There has been a bit of a pullback. We are definitely not bullish on retail shares at the moment, as I'm sure you're aware. I think if you look at all of them across the board, with this quantitative easing, a lot of free money coming into the system, chasing these story stocks, the Africa theme definitely coming through here. Pick n Pay, Shoprites, Massmarts, all of those companies have been pushed onto fairly expensive multiples from our point of view. So no, we're definitely not bullish on any retailers at the moment. Credit retailers, we are though, but
African Bank, if I'm not mistaken.
No, Lewis and JD Group are two credit